Hey, I'm so happy you're here. Today I'm here with Barbara Tilka, who is a certified financial educator. So her passion in life is taking all this knowledge that she has and working with people and actually educating them on how to get themselves into and sometimes out of financial situations. She's amazing at it. I'm lucky to know her, and we wanted to talk to everybody about how to get ready for homeownership because there's a process to it. You don't want to start going down the path of homeownership when you find the house that's your dream house. You want to start 6 to 12 months before that. And Barbara is the person that you need to talk to make that happen. So thank you so much for being here.
Thank you. This is great.
I'm excited. Okay, so let's kind of just jump right into it because you and I have known each other a long time, but we've also worked together helping some people who are mentally and emotionally ready, but not necessarily financially ready. And there's a process to getting people financially ready to take on a mortgage and to get there. And it's not a horrible process, but you need somebody like you to walk them through what they need to do. I don't know these things. That's why I refer these people to you because you're the master of this. So kind of talk about talk about where you'd start.
Well, it starts with what can you afford in your budget? And I ask that when someone comes to me, I said, and most people don't really have a clear budget. So, what's your take home money? Not what you get paid, what's your take home? And what are
Mhm.
the things that you need near your bills? What are the things that you like to do? So you got to know all your expenses, not just bills. And then what's your housing cost? If you're not renting right now, maybe you're living with family. That's an even bigger thing. You've got to know what can you afford as far as, when you go to get a mortgage to buy that house. So you have to start there. And
Right.
I
If you're
certainly
not, and
help
if you're
people
not
with that.
putting money away, if you're living with family and you're not putting money away like you're paying rent every month, and correct me if I'm wrong, then you're really not prepared. You should be
Right.
squirreling
And
money
and
away at that point because otherwise you're taking on a massive bill that you haven't budgeted in your life, in your lifestyle.
right, exactly. And that's the part of it is, how much should you be saving and where do you put those savings? And that's another thing that a lot of people don't understand is just understanding the compounding and what we teach, the rule of 72, which is in the books that we teach from. Where's the money sitting and is it getting some growth to it while it's sitting there? Auto auto draft to your savings. Make sure it's a habit. And knowing if you're going to be on track, knowing how much you should have for a down payment. A lot of people assume a lot of stuff, whether it's a too much or not enough.
Well, it's really funny you say that because I talk to a lot of lenders and one of the most watched topics that we discuss is people don't realize you don't need 20% to put down. And
Right.
that may be a good thing and it may not be a good thing. It very much depends on the situation. But VA loans are 0% down. FHA loans are 3.5% down. And sometimes getting into that house and rather than paying rent, it can make a lot of sense. But there's also times where you're going to advise people that they're not ready if
Yeah.
they want that low of a down payment.
And yeah, to your point, definitely, I always tell my clients, first of all, figure out what you can afford, and
Mhm.
then make sure that you've talked to, mortgage professionals
Right.
who will tell you this is if this is what you want. Could be you're a first-time home buyer. I don't get involved in those details because I'm not licensed to do that. But I do encourage people get with the professionals. It doesn't hurt to know, exactly what you need to have, to put down. Which then probably segues to the whole discussion of credit.
Yes. And that's a
So,
big one.
because when you talk to a mortgage lender, and they will tell you, what's your credit look like? And a lot of young people have never looked at their credit.
Or they've looked
A
at it
quick
on Credit
story.
Karma. Or they've looked at it on
Yeah,
Credit
and
Karma and they think that's their actual credit score.
right. And you're right. And mortgage lenders could do a whole piece on that. I can tell you one of the things that I've seen recently is young people have their credit stolen because it's usually not damaged yet. And I have a client who just found out someone took out a big credit card and jacked it up. Well, but I'm able to help them. We got it reported, got it removed. But you don't want to be looking for a house and then trying to figure out, oh no, I've got something on my credit that's wrong.
Right. You need to know about this beforehand because you're going to miss out on that dream house. And that is a crushing when you find the house that you think is your house. It can be hard to recover from that. No other house is going to compare. You don't need to fall in love with the house first. You need to start in the process.
Yeah. And you and I have worked very closely on when someone just suddenly discovers something on their credit that is wrong or they
Yeah.
needed to fix. Don't stick your head in the sand. Waiting for years is a myth. All the things that I see, oh, just go to a credit repair company. Yeah, no.
Oh, please
Just
don't
come
go
up with a
to.
strategy to get. Yeah,
Yeah,
we won't go there.
we, yeah, we definitely dealt with that. But most of those credit repair companies, let's just say a little something about that. Most of those credit repair companies are not legitimate. Is that a true statement?
Unfortunately, yeah.
Okay.
Yeah.
They're
Yeah,
just like everything else. They're
people are spending a lot of money doing this repair process when they should be, that same amount of money should be saving, paying off debt, and so forth. So, but no, I think credit goes hand in hand with saving, making sure your credit rating is good. If it's not, then, get with someone who knows what they're doing that
yeah.
can get you a strategy. And I do that a lot. I get people a strategy to figure out how they can get it back in order quickly. It's just a myth that you've got to wait years. Not the case.
Yeah, and there's no substitute for putting a plan in place and working that plan. It doesn't happen by magic. You're not gonna write letters and just all of a sudden all this debt that you've accrued is gone. That's not how the world works.
Yeah. And even if it is all your debt, there are solutions. We work with people every day, working on that to come to a plan. And it doesn't take a lot. So, but yeah, that definitely that. And then of course, addressing your debt there's all sorts of ways to do that. And we teach, different ways to do that. But yeah, you can save and pay off debt at the same time, by the way.
Well, is that what you
So,
recommend? Like if you've got somebody that has three credit cards that are maxed out, and they also want to buy a house, and the income like, do you recommend? And I know I'm asking for a concrete example, or I'm giving you a concrete example, but it's not really. I mean, do they go hand in hand? Because I would assume if one bad thing happens while you're in the process of paying off debt and you don't have any savings, then all that can go for naught. So I'm assuming your plan is to do both at the same time, generally.
right, because often when someone has high credit card balances, it's because life happened. Maybe they had a job loss or a health event, an emergency, and they didn't have emergency reserves. So you got to get in the habit of making sure that you've got those reserves while you're paying off debt. Otherwise, you're back jacking up the credit card again. And
Right.
when you are a homeowner, we can talk about that next, but you have to continue the same process.
Absolutely. Because I get passionate about talking about condos, and I know you've heard an earful about it, but trying to communicate condo fees to people, and the people that come to me and say, "Oh yeah, I really like that condo, but oh my God, those condo fees, I can't. It's just too much." What I really work hard to communicate to people is that no, it's not. You're paying that money regardless. Yes, maybe there's a little management fee in there, but that's not where the expenses are. That's your insurance. And those condo fees are also paying for a reserve account, a savings account for when repairs need to happen. And homeowners aren't necessarily doing that. So
Yeah,
you have to understand that the expense isn't just the mortgage. There are expenses in maintaining a home if you're a first-time home buyer that you need to plan
exactly.
for and you need to budget for. And that's where you come in place
Right.
because helping people with that budget's a big deal.
Yeah, I would say anyone who has these big chunks of expenses that come up with home ownership, whether it's a septic tank or a roof or a hot water heater, a lot of people don't really have those big chunks of money sitting around. And where does it go? Either they get a loan or they put it on credit cards. So we're really, when you're saving towards buying that home, you got to make sure you still continue to understand that you got to have reserves. And I mean, there's other nuances to home ownership and making sure you have some big reserves, for those big expenses.
Oh, right. Yeah. You don't have anybody forcing you to save for a new roof. And by the way, yes, there are lots of companies, if you need a new roof or something like that, they will finance that roof for you. But that interest rate is painful. It is
Yeah.
excruciating. And it sometimes is necessary, but it's not
Well,
planned.
it's if it's the only option. Yeah.
Right. Sometimes it's the only option.
Yeah.
You got to do what you got to do because you got to protect your property, but
Yeah.
it's
And I
not
I would
planned.
I would add I've got someone who wants to just take all the money out of their retirement account to get the roof, and I'm just cringing because that's a whole other discussion, which, people do that because they don't think any other way. And that's why a lot of people are not ready to retire.
Yeah,
So,
absolutely.
yeah, yeah.
So, okay, so once all right, let's say we've gotten to where you're ready to buy the house. You've talked to me, you've talked to one of my favorite lenders. Barbara's gotten you ready for, like, you're financially prepared to do this. Well, first of all, are there any red flags that you can think of where people think they're ready, but they're just not? That's kind of a big question.
Yeah. Well, I would say it goes back to, do they really have a clear budget? Do they understand? Have they spoken to the mortgage lenders and know, approximately what their monthly payment is going to be? And then have they revisit the budget to see, okay, taxes, insurance, got to get some yard equipment, maybe we're getting furniture. And,
Right.
you know, y- certainly when
Moving's
you have
not
a
cheap.
mortgage person on here, they would say, don't go buying all those things until you get the house. So that's
Oh no.
obviously,
At one point several years ago, I had somebody who, where it's an afternoon closing. That morning, they had gone to the furniture store and they hadn't bought furniture, but they had gone ahead. They were, I think, at Rooms to Go. It doesn't matter. But they had applied for the credit card to do the furniture. And the simple act of applying for that credit card was enough that they had to call them and cancel that application, or it would have kicked them out. They would not have been able to get that mortgage. They hadn't even
right.
charged anything on it, but they opened a new credit account. You cannot do
Yeah.
that. Like, you
Well,
can
I've
leave
been,
the closing table and go do it, but you cannot do it on the way to the closing table.
yeah. And I've been doing this long enough and working with people like you that I know enough to say, don't do that.
Yeah,
Don't go buy a car. Don't buy furniture. Don't quit your job. And I know that my mortgage lender friends would say, oh gosh, yeah.
yeah,
So,
absolutely. And people do. That's the crazy thing. And they don't
yeah.
think about it. They don't, oh, my son needed, my 20-year-old son was at college and needed a car. So we went and bought him a car. We didn't even buy him an expensive one, but they don't think about that as opening up a credit account, but it is. And yeah,
Yeah.
it just,
And I would add, when it comes to cars, I've had clients who I knew they were getting a mortgage and they had maybe a credit card and a car loan. And maybe they had a little couple thousand left on the car loan. And they said, oh, I just want to pay that off and close it. And that actually can affect your credit score. So it's like just status quo, just keep it the same.
doesn't make any
Don't get all
sunroofs.
ex- don't get all excited about paying everything off before you close. So that's
That's
another
a
thing.
really good point, though, that people don't necessarily consider, because that does change. It changes your credit picture. And you have been underwritten for that loan based on your current credit picture. Just stand still. It's usually about a 30-day process. You're just going to stand still once your lender says you are good to go. Don't do anything
Yeah,
crazy.
right.
That
And I
that
always
is funny
say,
that I would
stop.
not have thought about. That's an interesting
Yeah.
point, though. Even paying off something and closing something can be an because it can actually negatively affect your credit briefly, right?
Yeah, I've seen it actually drop someone's credit score because it closes an account that was a good history and it was a good combination. So you've got revolving, which is credit cards, you've got installment, which is car, and mortgage is that other type. And it's not a bad thing to have one of each. That really props up that score. It's good history. It's, not maxing out the card, but the having the car loan is not a bad thing. Now, the lenders will, I defer to them. If they say you've got too much debt, that's a whole other discussion. But I always tell my clients, tell me what the mortgage lenders told you and what you need to work on. But I can say, don't close account.
Yeah, absolutely. Okay, and so now once you're in the house, once you've gone through this process and you're closed, what are the things that you need to be putting in place going forward? Because and now if you're younger and you're doing this, you're full on adulting at this point. So now it's time to really get your plans in place. So what do they need to be looking at to get in order to set themselves up for success in life? Because buying a house is part of that strategy for sure.
Yeah. Well, I would definitely say it takes usually about 4 to 6 weeks for your budget to kind of settle out, what your utility bill is going to end up being and, some of the things that have changed. So that's another time when you want to sit down and look at your budget again. And again, budget's not just bills, it's everything that it costs to run your life every month. And look at that again with the mortgage payment and all the other things that may have popped up that you didn't think about. Maybe it's cable, maybe it's internet, and you were living with someone else and didn't have to pay that. And so you just revisit your budget.
Who are you getting your Netflix account access from?
Yeah.
Right?
Oh, I've had couples who they've been married for several years and are still on their parents' car insurance, cell phone, and so all of a sudden when they're adulting, it's oops, we just have another couple hundred in our budget we got to pay for, you know.
Yeah,
So
absolutely.
so definitely I'm speaking to the first time home buyers when I say that is really look at a true, and I guide people making sure they don't forget about that, you know. So, but that's one thing. The other thing that I would say is you have to protect that income. And I'm a big fan of when you're at work and you've got supplemental benefits that come out and it says disability or accident. I always say, and I'm not selling it, I'm saying check that box. I mean, a good example is my daughter-in-law just broke her ankle. She's out of work for 6 weeks. She checked that box at the hospital when she's a nurse. And oh boy, she's in great shape because she's going to get paid while she's recovering. So, got to still pay the mortgage. Doesn't matter
Yeah,
that you broke your ankle, you know. So,
yeah,
and then God forbid, the worst scenario is if you lose an income earner. Maybe it's a car accident, maybe it's a sudden health event, but the fact is, life insurance is what you need to make sure. And you got to make sure you're with someone who's licensed and knows what they're doing. And we're not talking about mortgage insurance. That's a whole different discussion. But I often hear people say, okay, now that I've got a house, Barb, what do I do? That's critical because you don't want to lose the house you know,
yeah.
once you've worked hard to get it. And then the last thing I would say is people don't really understand that this is really an important time to have an estate plan. An estate plan is not you're wealthy and got lots of money. It's you got a house, and that's a really big deal because we always talk about avoiding probate. That's a whole other legal discussion, but if anyone's interested to know how that works, you don't want a house tied up in probate. God forbid something happens to your spouse, and or and you haven't done your plan. So those are just some big adulting things that people don't think about.
Those are big adulting things. And by the way, you can get to my age and still not have those things in place. A lot of people don't.
Yeah,
And you start, so it's important to have those conversations, even if you're not a first-time home buyer. If you don't have those things in place, you need to be
yeah,
having those conversations so that you're protecting your family. You're protecting the people that you're creating all this, because most of us don't create this stuff for ourselves. We create this stuff for the people that we love.
exactly. Right. And if you've got children under 18, you've really messed things up if you've left them, some guardian's got to figure it all out. And those are all
Uh,
part of estate planning discussions. Yeah.
Absolutely.
Yeah.
Absolutely. So, okay, so
Yeah.
what have we missed? So we've gotten ready. We've figured out, they've worked with you, they've figured out their budget, they've done their savings, they've got their credit under control, we've not bought the house, and now we're making sure that we're properly insured and properly saving to make sure that you're getting ready for any big events. And by the way, and I always bring this back to condos, which is probably silly, but that's how my brain works. Um, Assessments. Everyone always asks, well, can they assess you with a condo? And first of all, what I say is it's not they, it's you. You are a homeowner in a homeowners association. So it is you, and those decisions should be made. You should be part of that process. But yes, if there's large things that need to be paid for in a condo community, yes, they're going to assess you. Well, that isn't any different than if you need to replumb your house, if you need a new roof, if you those are all assessments. It's basically the same thing, and planning for those is critically important because they're going to come up no matter what you're doing. No matter what you're doing.
Right.
Um,
Yeah.
so okay,
So
so
it,
we've
it
done
goes
that. We're
back
getting
to
it planned
reserves.
together.
Yeah. And always think, don't spend every dime you make. I say it to everyone, and it doesn't matter. I see people making high six figures and they're spending everything they make. You gotta have reserves. And
Yeah.
and especially when you have a property too, because those are the things that when you rent a property, you usually can turn the key and go. You don't have to deal with the AC going down or the plumbing or whatever. So definitely, yeah.
You can turn the key and go, but you also, and one of the biggest lessons that one of the biggest things that I like to explain to people is yes, renting, you don't have to deal with these things. And that is very true. However, you also don't have control over your expenses because that rent's going to go up over time. If you have
Yep.
a mortgage, that mortgage stays the same over 30 years. Let's assume it's 30 years and that's how you're paying it. It stays the same over 30 years. So 15 years in, that mortgage is actually probably looking pretty good because renting the same place would cost significantly more than that mortgage, but you've stabilized what your housing costs require.
Right. You control it. Yeah, definitely.
Yeah.
And I see a lot of people paying a mortgage premium or payment much less than if they were to sell the house and rent. Definitely. Yeah.
Absolutely.
So,
All right. Well, we are about out of time. So what is there anything that you've missed? Is there anything that I need to that you want to that I've missed asking you? Because there probably is, I'm
well,
sure.
I mean, it just goes without saying, don't try and wing it with all these things without asking for professionals. I don't claim to understand the mortgage process. I've been a home owner. I've bought and sold lots of homes, but I don't do it without having a real estate professional. And the same as, when you've got your property taxes, understanding homestead exemption, portability and all those things. Don't Google everything financial or real estate or
The Google
mortgage.
machine can be very
Chat,
wrong.
yeah, and in the day of artificial intelligence and chat GPT and everything, it does not replace all of our years of experience. So you definitely need to work with a professional. And that's why we're trying to teach people.
Yeah.
So,
And one of the things that I love about you is, and one of the reasons that we are good friends is we are both sort of on the same level of it's all about educating people and making sure they're making the right decision. Neither of us are really trying to sell you anything. We're trying to help you be successful in life. That is the goal. And I figure if
awesome.
that's our goal, we're gonna be successful in life as well because that's the proper goal, you know?
Yep. Exactly. Yep. So thank you for the opportunity. I appreciate sharing.
Yes, I'm so excited to talk to you. I will be talking to you soon, and if and I will put contact information. I'll link in posts and all that good stuff so people can get a hold of you. Thanks.
Awesome.
Bye.
Great. Have a great day.